Hey everyone! So right now, Bitcoin's sitting back at $86,000. And XRP, it's hanging out at $2.04. And I know what you're thinking. What the heck is going on here? Why are we seeing all this selling pressure? Well, let me break this down for you because there's a lot to unpack. But here's the thing that's crystal clear to me. They want us out. And when I say they, I'm talking about the big institutional players, the Wall Street heavyweights who are literally trying to shake retail investors like us out of our positions so they can scoop up our coins at cheaper prices. And honestly, it's been working. I've been scrolling through X lately and wow, the sentiment has completely flipped. People are getting super bearish, and I'm actually going to show you a post that perfectly illustrates this in just a minute. But first, let's talk Bitcoin, because today was actually a pretty important day. It was the weekly candle close for crypto. And you know what? It wasn't terrible. Bitcoin closed around 90.7K, and we're still holding that crucial support level. Sure, we've sold off since then, but here's what's really catching my attention. I keep looking back at previous patterns, especially what happened in March and April. We saw this potential reversal that led to a sell-off, making a lower low, and then bam, back to the upside we went. Now, I'm not saying we're going to see an exact copy-paste of that pattern. The market doesn't work that way. But the similarities? They're pretty striking. Look, I've said this before and I'll say it again. I don't think we're heading into a bear market. But let's be real here. 2025 has been pretty rough for crypto. Most projects, except for a few standouts like XRP that hit new highs back in July, have been stuck in this constant lower high, lower low pattern. It's been brutal. But here's where it gets interesting. I don't think this bearish trend is going to carry into 2026. Why? Because all the major issues that have been crushing crypto prices are starting to clear up. And the biggest one, liquidity. Everyone's obsessed with the 4-year cycle, right? But here's what most people don't get. They don't understand what actually drives that cycle. It's all about liquidity. When liquidity gets tight and starts contracting, prices fall. It's that simple. But guess what? Starting in December, literally today and tomorrow, liquidity is going to start improving. Now, I need to be clear here. This is a lagging factor. It doesn't happen overnight. I see people saying dates don't matter because prices don't just magically jump, and they're missing the point completely. We're not talking about immediate price jumps. We're talking about the underlying financial conditions that create the environment for price improvements. It's all about liquidity, folks. Now, let's talk about XRP specifically because, wow, what a sell-off. I've been watching some key levels, and the big one has been that daily resistance around $2.22. We've been bumping our heads against this level for weeks now, with multiple daily closes below it, and now we're seeing the consequences of that failure to break through. This is exactly the kind of action that separates the strong hands from the weak hands. The question is, which one are you going to be? But hold up, what actually triggered this massive sell-off? Well, here's the kicker. China made another announcement. Yeah, you heard that right. China's central bank just reaffirmed their crypto ban and warned they'll intensify their crackdown on stablecoins. And honestly, this is absolutely hilarious for so many reasons, which I'm about to break down for you. First, let's look at what happened to the overall market. The total crypto market cap was already showing some weakness, forming a slight downtrend. But today, we saw a complete cascade below that crucial $3 trillion mark. This whole move was fueled by liquidations. And trust me, the liquidation heat maps were absolutely brutal today. But here's what's really telling. We're sitting at a fear level of about 24 right now. The crypto market cap is below $3 trillion. Bitcoin's back under $90,000. And suddenly, everyone thinks this is the end of the world. I actually saw this post from James Nguyen, and look, James has basically become a meme in our space at this point. But the scary thing is, a lot of people are thinking exactly like him right now. He's saying we're in the anxiety and denial phase, and he thinks panic is coming next. He's calling for Bitcoin to drop to $67,000, and even believes we could see $40,000 to $50,000.
Here's the thing though.
Everyone's trying to perfectly align this market with previous cycles, but they're completely missing the point. Liquidity has fundamentally changed this time around. This affects timing, it affects the setup, it affects everything about this cycle. And let's be real, we've been bombarded with negative headlines all year long. Trade wars, tariffs, you name it. Sure, there's been plenty of good news too, but all the bearish headlines have completely overshadowed the positive developments. Now, here's why China's announcement is absolutely comical to me. This isn't their first rodeo, not even close. Let me take you on a little trip down memory lane here. Going all the way back to 2013, banks banned from Bitcoin. 2014, false reports of Bitcoin bans in China. 2017, closure of local exchanges. 2019, warnings to miners. 2021, state-owned banks ban Bitcoin transactions. But wait, there's more. China bans people from selling crypto. Authorities literally shut off electricity to Bitcoin miners. The state council reiterates the ban again. Chinese search engines block exchanges. They ban cryptocurrency mining, shut down websites and social media of major blockchains, declaring all crypto-related transactions illegal. I mean, seriously, China has tried to ban blockchain and crypto so many times, especially during 2020 and 2021. And you know what? If it wasn't China making these announcements, it was India. Remember that? India was constantly threatening to ban Bitcoin, ban crypto, get rid of the whole thing. It was like clockwork, a new ban article every single month. The pattern here is crystal clear, folks. And we all know what happened back in 2020 and 2021 after all these ban announcements, right? We witnessed one of the most epic bull runs in crypto history. Now, I'm not saying we're going to see an exact repeat. The market never works that way. But I am saying that when I see headlines like this, combined with the current fear levels, my mind immediately goes back to those patterns. Here's what's really wild. This China news caused Bitcoin to drop over $4,000 in a matter of hours, which triggered absolutely massive liquidations. And this brings me to something I've been screaming about for months. Stop playing with leverage. Seriously, leverage in crypto is just insane. You don't need it. If you don't know what you're doing, stick with spot trading. Heck, even people who do know what they're doing are getting completely wrecked right now. Get this. Over $400 million worth of leverage longs were liquidated in just the last 60 minutes. And it got even worse from there. We saw another $200+ million in longs get liquidated, and $40 billion was wiped out at the entire crypto market in just a few hours. But here's the kicker. This all happened over the weekend. And that's huge because weekend price action is so much easier to manipulate than weekday trading. During the week, we're still somewhat tied to traditional stock markets, but weekends? It's prime manipulation time, folks. Speaking of traditional markets, even US stock futures started falling because of the crypto sell-off. The crypto market cap dropped back below $3 trillion, and suddenly this fear is spreading to every market out there. It's this constant back and forth that's been driving everyone crazy. One day we're back and bullish. The next day, it's all over. This has been the pattern for over 10 months now. And honestly, I don't think it's going to stop until we finally break and hold some key resistance levels. Now, here's what's really got my attention. And this is about XRP specifically. Because if you've been paying attention, almost every single major sell-off in November has been directly correlated with XRP ETF launches. I'm talking about a pattern here that's impossible to ignore. I even mentioned that the fifth spot-based US XRP ETF was rumored to launch today. Now, I haven't seen major confirmation from 21 shares yet, but they've been dropping hints and hyping up the XRP army, saying get ready and that they've heard really good news. But here's the thing, and this might sound like a conspiracy theory, but the data doesn't lie. Nearly all ETF launches happen around major market sell-offs. I don't think this is a coincidence at all. There's a clear strategy here to suppress the success of XRP ETFs. I've been tracking this pattern for weeks. Remember the 13th? We dumped right around the XRP ETF approval to suppress the market. Then we got another ETF launch on the 20th. And what happened? Another Bitcoin sell-off. The timing is just too perfect to ignore. Let me show you exactly what I mean by breaking down the last few ETF launches. Before Franklin Templeton and Grayscale, we had Canary Capital's XRP ETF launch. What happened? Market sold off hard and kept selling into the next official launch. Then came the Bitwise ETF launch, and boom, another deep sell-off. But here's where it gets interesting. After Grayscale and Franklin Templeton launched, we actually started pumping. And now, going into today with another rumored ETF launch, we get hit with this massive sell-off again. Guys, this is clear manipulation. And look, this doesn't even have to be specifically about XRP, but the correlation is just too strong to ignore. These sell-offs keep happening either the day of, the day before, or the day after XRP ETF launches. I don't believe in coincidences, especially in markets that are driven by pure emotion. There are all these narratives floating around. Oh, Wall Street selling to crash the market so they can buy XRP cheaper before ETFs go live. And honestly, some of them might be true. But here's what I can tell you with 100% certainty after being in crypto for years. This market is heavily manipulated, way more than stocks or traditional markets. And you want to know why? Because those other markets are regulated. Sure, regulation doesn't completely stop manipulation, but it puts some guardrails in place. Crypto, there are basically no regulations, which means we see manipulation on steroids. Exchanges can force sell people's positions, target leverage traders. Major players can coordinate headline articles while they're buying or selling behind the scenes. Remember JP Morgan years ago? They were literally telling employees anyone caught buying Bitcoin is fired, while secretly buying Bitcoin on overseas exchanges. It's the classic manipulation playbook, and retail investors, that's us, are the ones who get absolutely crushed. Whether you're in leverage positions or just holding spot, when you see sell-offs like today, and especially with XRP taking this kind of hit, it shakes people out big time. And that's exactly the point. Let me show you something that will blow your mind. Pull up XLM for a second. Stellar is the perfect example of why so many people have just given up on crypto entirely. XLM topped back in November of last year. We're talking 378 days since XLM made a new high. Over a year of just sideways action and downtrends. This is exactly what I mean when I say this market will shake you out. And here's the thing. It's not just about price action. There are two ways they get you out. Number one, price shakeouts, like what we're seeing today. Number two, time capitulation. They make you wait so long that you just give up. Because let's be honest, we're impatient. Most people can't handle waiting over a year for their investment to move, so they sell and move on. Then boom, that's when the market decides to reverse. So the million-dollar question is, when are we actually going to see this reversal?